All right, ladies and gentlemen, I am ready for you now. Work Together 15.1 is available to you. So, before we do anything, ladies and gentlemen, let's look at the screen. Okay? When we look at 15.1, this is a permanent financial statement. A permanent financial statement is going to be something that a business creates that would be shared out with its stockholders if it was a publicly traded organization. So, for example, if you wanted to invest in Apple, okay, as a stock, you could go out and you could find their income statement. It's not going to look exactly the same, but any publicly traded company would have to have an income statement. Now, we have done an income statement before. Revenue minus expenses, that gives us our income statement. But here's the thing. Because we are a merchandising business, our income statement changes. And the reason it changes is because we have something called our cost of goods sold. Okay? We have to account for the fact that before, when we were a service business, all of the sales that we generated was just profit for us. Now, if I turn around and I try to sell your shoes that you have on your feet, if I sell them for $75, that is not straight up profit for me. I have to pay for them, okay? And that's where you're going to get your cost of goods sold. The other thing that we have is we have some contra accounts that we have to deal with. We have sales discount and sales returns and allowances. Sales discounts and sales returns and allowances do what to the value of sales? Make it go up or down? Drop. Same thing for purchases discount and purchases returns and allowance. Those two contra accounts make purchases go down. Now, sales is a revenue account and has a credit normal balance. Purchases is a cost account and has a debit normal balance. And when we deal with that, we have to go through and realize how this is going to come into play. When we look at our income statement, we know this is an income statement because the very far right column says percent of sales. That is always your clue to what we're doing is going to be an income statement. Now, we have 4 columns for numbers. Okay, before we didn't have 4 columns. What you need to realize for preparing an income statement, that is, your goal is to get the totals on the far right column to go down. This tends to be one of the trickiest parts for students for this chapter is in the income statement, remembering how to do our cost of goods sold section and figuring out which columns it goes on. Because if you put it in the second column, it's supposed to go in the third column, you know Applia is going to say, nope, that was wrong, and is going to give you the X. Okay? So I'm giving you that as a heads up. I always try to give you forewarning on areas that are tricky. My recommendation for you is I would make a note card that you would be able to write on and then go through and label your cost of goods sold section so you remember your headings and how it flows through, and then kind of mark with an X like where numbers go on the columns, and that would be something you can use on your test for this chapter. Your handwritten information on a note card. Sound good? I'm giving you that as a heads up now because that'll be one of the trickiest parts that we have to do. So, we are going to get all of our numbers to prepare our income statement from our worksheet. And our worksheet is going to be given to us in the directions. Okay? So I'm going to go ahead and open up that. We're going to go through and prepare income statement for Interstate Tires. So on the very top, we're going to choose the name of our business, which is Interstate Tires. The name of our document is an income statement, and then the date. It does say it's for year ended, bless you, December 31st. Income statements are always prepared for the fiscal period, meaning we are going to say for year ended, for month ended. It's not going to be for a specific date. So I'm going to go ahead and put in for year ended, December 31st of the current year. All right. So our goal is to get, if we look here, pretty much everything from our income statement columns of our worksheet onto here. But this is where we get a little tricky. Do you see this 9,481.08? This number right here? Where is that from? What is that 9,481.08? That means nothing to me. You got to understand, where did that 9,000 come from? Say it again louder. Merchandise inventory adjustments. So that 9,481.08 is not going to go on our income statement. We have to deal with our merchandise inventory. So we have to deal with the fact that the value of our merchandise is going to fluctuate. Now, this is a tricky part. Okay. When I want to make this bigger. When I look at merchandise inventory right here, up here on my worksheet, I have merchandise inventory on my trial balance is $198,480.33. Now, I go over here to my balance sheet, and it's $188,999.25. What happens here is, at the start of my fiscal period, we did inventory. Okay, or at the end of the last fiscal year. Right now, my school store managers are doing inventory. That's got to be one of the things that you do at the end of your fiscal year. And they go through and they get a total value. And that value may be higher or lower depending on what's happened throughout the year. You have theft, you have breakage, you have just general loss, or the fact that you just bought a whole bunch of merchandise. Because think about it. When I turn around and buy things from the store, am I affecting the account merchandise inventory? If I buy merchandise on account, what account do you use? Purchases and accounts payable, right? If I pay cash for merchandise, I have trained you, when you see that word merchandise, you don't affect merchandise inventory, you affect purchases. We really haven't looked at this account merchandise inventory before last chapter. So anytime we buy stuff, we use the account purchases. So this adjustment right here, this $198,480.33, this is the value of my merchandise inventory January 1st of this fiscal year. The amount on my balance sheet, the $188, that is the balance of my merchandise inventory on December 31st. So I have beginning of the fiscal year, end of the fiscal year. And my adjustment is what happens that I need to do to get that account there. Okay? That is important because you are going to have to, on your income statement, say your merchandise inventory on January 1st, and you need to know the difference between the two. That is also going to be something that will kick you in the patooties. Okay? So, we have three main sections on our income statement. We have our revenue, which is sales. We have our cost of goods sold, which is the whole new section. Oftentimes, you're going to see cost of goods sold abbreviated as COGS, C-O-G-S, cost of goods sold. And then we're going to have our expenses. So the very first thing that we realize, on this first top line, we're going to put in our first heading, which is going to be revenue. Revenue is going to be followed by a colon. Now, all of my revenue accounts are what? Nope.
Expense.
Nope. Revenue is a classification. Expense is a classification. What accounts are my revenue accounts?
Sales.
Yes. Sales discounts, sales returns, and allowances. Those are my revenue accounts. So my very first one I'm going to put here is going to be sales. And my balance of sales is $548,989.25. Now, I have two more sales accounts, and my first one is sales discount. Sales discount has a balance of $661.69, and then I have sales returns and allowances. Now, this assignment's easy because it tells you where to put your numbers, because you can't type in all the spots. I kind of wish Applia didn't do that, because otherwise you just learn to rely on they're going to have it there for you, and they're not going to just have it there for you. Okay, so remember what I said. Your goal is to get your total to the right side. So we have an account called sales. We have two contra accounts to sales. Our two contra accounts are sales discounts and sales returns and allowances. So the main thing that we have to do is we have to add up our two contra accounts and subtract that from my sales account to get my total to the right. So when I look here, I have sales, sales discount, sales returns and allowances. Sales goes in the third column. Sales discount, sales returns and allowance goes in the second column. I'm going to take $661.69 and $3,005.12.84. I'm going to add these two numbers together, and I'm going to put that number directly right here. Okay? And I'm not going to give it a new total. I'm just going to do the math, and with my math, I get $4,174.53. Now, what am I going to do with that $4,000? Okay, and that is going to give me my net sales. So if I take my $4,000 from my $548, I'm going to get my net sales of $544,814.72. Okay, that is my first section of my income statement done. Okay, we're not doing the last part yet. We do that last. Okay, so don't do that percent of sales column yet. My next section that I'm going to do is called cost of merchandise sold, followed by a colon. That is a heading. No numbers go with it. This is all new. Okay, so the very first thing that we have to do to figure out our cost of merchandise sold is we have to figure out truly what is the price of all those tennis shoes that I'm turning around and selling. To do that, I have to start with my merchandise inventory on January 1st. Okay? My merchandise inventory on January 1st is when I look at the account merchandise inventory, I get the amount from my trial balance. Half of you are going to get this wrong on the test. Okay? Merchandise inventory, trial balance, that is your January 1st number. So I'm going to take that 198, put that in the third column. So 198, 480, 33, that's going to go in column number 3. Now, that's what I started with. I have to account for all of the stuff that I bought throughout the year. And when I buy merchandise, what account am I affecting? Purchases. So we have purchases, and then we have our purchases discount and our purchases returns and allowances, just like sales. Okay? So we have to go through now, right below merchandise inventory, and get put in purchases. And purchases has a balance of $278, $452, $39. There are two contra accounts to purchases. Those go directly below it. So I'm going to say, I forgot to say less before. I got to change something. Less purchases discount. Up here where it says sales discount, I made a mistake. I'm supposed to have less, colon, sales discount. If you don't have that, it will mark it wrong. I apologize. It's less with a colon and then sales discount. And then directly below purchases, it should be less with a colon, purchases discount. The amount in purchases discount is $1,845.78. Below less purchases discount, I'm going to say purchases, returns, and allowances. Purchases, returns, and allowances is $3,548.65. Those are two accounts that we use to keep track of things that decrease the value of purchases. Now, this is just like what we did for sales. We have our discount and our returns and allowances. I'm going to take these two numbers, And I'm going to put it directly to the right of it, just like we did for sales. So add those two numbers up. Anyone got some digits? Yes, $5,394.43. What do I do with that $5,394.43? We don't have debit or credit. We subtract. And the reason we subtract is because it says right here less. Okay? Now, when I subtract that $5,000, that is going to give me my net purchases. And my net purchases is $273,57.96. $273,057.96. Okay. So far, we have, this is what we started the year with, $198,480. Throughout the year, the net amount of shoes that we bought equals $273,57.96. Agreed? Okay. Now, we have to figure out the total cost of merchandise sold. So what I need to do is I want to go through and add those two together, and that's going to give me my total cost of merchandise available for sale. So I'm going to take the 198 and the 273, add the two together, and that gives me my total cost of merchandise available for sale. Anyone got digits? We're adding those two numbers down in the third column. You're adding 198 and 273. Shufa, what'd you get? Yeah, $471,538.29. That's my total merchandise throughout the whole time my business is open. That's the total amount of shoes that I could sell. I need to find out the cost of shoes that I did sell, though. I didn't sell all $471,538.29. Because if I did, how many shoes would I have in my store? Zero. Do I still have shoes in my store? I should, otherwise I'm not a very good business. At the end of the fiscal year, a business's goal is not to have nothing on the shelf. Your business's goal at the end of the fiscal year is to find out how much money they made and to be able to still sell products to your business. So what we have to do from our total cost of merchandise available for sale is subtract our ending inventory. And our ending inventory is on December 31st. That is the amount from your balance sheet column of your worksheet. So I'm going to put right here, less merchandise inventory, December 31st. I'm sure. Merchandise inventory, December 31st. Okay? Now, yes, this number right here, 1889925, is our ending inventory on December 31st. That's the number that goes here. That is the amount of shoes that I have left. Brooke? Is there enough room there for that? Yeah, I think next, if you want to go up to the top room, and we'll put some up there. Does that make sense? But if you want to tell the next group, that would be great, because I think we'll have more room up there.
Yeah, none of the rest of the groups are close.
Well, thanks for getting your red velvet ones done. Okay, so we have the 471 and the 188. Mathematically, what do I do? How do you know? Yes, exactly. Point. Obvious. It says less. We must subtract. And that is going to give me my cost of merchandise sold. Mathematically, my cost of merchandise sold is $2,800. $2,082, $539.04. Yes. Yes, you got it. You nailed it. 471 minus 188 will give you your 282. Now, it's no different than if I say that I'm going to sell you this pen, okay? My sales for this pen, let's say, is $2. The cost of this pen is 75 cents. Okay? So what is my gross profit on sales? $1.25, right? That's my next heading. This is my $2. This is my 75 cents for my pen. The next heading is my gross profit on sales. And how did you find that out in my pen example? Subtract it. So that's what we're going to do. We take our total sales, subtract my total cost of merchandise sold, and that's going to give me my gross profit. Yep.
2. Oh, I got so close. What? You're stupid.
Let's see if you can answer. That's more. Let me take it along.
Check.
Oh, I got 5 points.
Those are really good.
Anyone else concur with my numbers? I don't see where I made him a blue. You concur?
Wait, where are the cupcakes for?
Yeah.
Marketing. That's their final.
They eat cupcakes for a final?
Mhm.
That's the eat it, that's so great.
You don't have to.
No, not at all. Okay, so when we first did our income statement back in Unit 1, where it was a service business, all we had was our revenue, because we didn't have any cost of merchandise sold. Now, this cost of merchandise sold, the gross profit on sales, is the hardest part of an income statement.
Yeah, I can tell.
Okay? That is what will trick you up, why I recommend getting a note card, writing it down, putting X's to show where they go. Okay? Now, the rest of your income statement is all of your expenses. Okay? So, that should be relatively easy to roll through. So my next heading that I'm going to say is going to be what? Expenses, followed by a colon. Now I list all of my expenses following on my worksheet. Advertising is your first one. No, alphabetical order.
Oh, I'm on the wrong one. I'm on the wrong one.
Yep. Oh, cash short and over. I have a typo. Thank you.
Found it right there. Right there. No, it's right there. Sucker. Yeah, but I asked. Okay. No, I'll tell you the numbers. Just relax. Nope. I'll tell you the document. Let's use some vocabulary. Line 25. Line 25.
Mine doesn't have those.
Shut up. You're gonna find
That's 28, bro.
That's 25.
Look at mine, 25.
No, it's obviously stupid.
You guys are not very nice to each other.
Stupid. Right there, 25. Found it.
Advertising. Right? Yeah.
Nuh-uh. Is it? Oh, I did it. I'm
that
a
far?
I'm a
You can't
bot.
remember the first one. Where it was? Where are you gonna where it was on the map?
She got a new map. She must have updated it.
Done. So you're going to list each expense. Starting with your first expense through your last one of utilities expense. You're going to put your federal income tax in a different spot. So after utilities expense, you're going to go ahead and then type in total expenses. And you'll do some math. Ooh, math. Add it up. You have to use the heading and then do the math. You find it now? Okay. Once you have your total expenses, you just have 3 more lines to finish up. Okay? The first thing that we have after your total expenses is you're going to subtract your expenses from your gross profit. And that is going to be your net income before federal income tax, which is probably what kicked your butt on the test yesterday. So below total expenses, I'm going to type in net income before federal income tax. Excuse me. And I'm going to take my 262 number and subtract my 184 number. I'll give you one. You see now why I'm suggesting to do that? Now, below your net income before federal income tax, where you take your 262 number and you subtract your 184 number, you then have to subtract your federal income tax expense, which on your worksheet is your last one, line 49. Okay? So now you take your 77 number, subtract your 14, and that's going to be your net income after federal income tax, which should be $62,907.35. And here's how you know if you've done it right. Look right here at your worksheet.
It should be the thingy right there, yeah.
It says net income after federal income tax.
62,907.
If yours on your income statement does not equal that, you have done a boo-boo. And you must find and fix said boo-boo. Okay, now the other thing that we have to do is our percent of net sales. Okay, now your percent of net sales, everything that's on the far right column we have to divide by sales. So you also have to have one decimal place. So if I take a number and divide by it itself, what is it?
1%.
100. We're going to put it in percent. So I'm going to give you a clue. Net sales is always 100. 0.0. You got to have one decimal place, okay? Now, what we do next is I have to take my cost of merchandise sold, my 282, 539.04, and divide by the 544,814. We're dividing everything by that 544 number. Try again. Look, 51.9. You got to round correctly. Now you take your gross profit on sales, 262, 275.68. Divide that by your 544. your total expenses, divide by net sales. Your 184 divide by your 544. Do the same thing for your net income before federal income tax. Take your 77 number and divide by your 544 number. These percents are powerful. What does this mean? Okay? For every dollar sold, 52 cents of it goes to the cost of the merchandise. Does that make sense? For every dollar sold, 48.1 is gross profit. Now, gross profit is before expenses. When I take a look at every dollar sold, 34 cents covers my expenses. Right? This is a leveling field. So if you were to go through and compare, for example, Don's to Woodman's, who is going to have bigger numbers? Woodman's, right? Because they have multiple locations. And if you try to compare millions of dollars to hundreds of thousands of dollars, it's always going to look like the millions of dollars people are doing better. But what you have to compare is your component percentages. Your component percentages truly tell you how the business is doing. Businesses have acceptable component percentages that they need to stay within.